back to another video. And we're smoking another wood. Hopefully you have your backwood rolled. Alright? Now, in this video, obviously you can tell by the title, we're talking about Oxy. Okay? So if you trade options, this is another one of my favorites. Alright? The reason why we're looking at some of these different ones, right? You're trying to find your rhythm with the dealing ranges. And so when we talk about, again, some of these perfect areas to participate from, and like I always say in every video, we need a definitive starting point. All right. And July being like the distribution for the year is, or for the quarter rather, is a perfect place to start. So that Monday, July 1st is a perfect place to start to see what price is up to. All right. And this is why I say like the 9 is so good for stocks, because you don't have to be on, you know, a ridiculous power 3 number to see where price is likely to spool to algorithmically. Okay. And you know what the funny part is? Like, however we want to look at price, I mean, I love these. It's the same every time you look at it. And it's funny when we break it down, it makes it like trading so much less scary, right? Now, on a basic level, do you see how price goes from the high here, drops down, comes back to the EXT, and it takes out liquidity here? All right. Now watch that for a second. Now on the screen, we talked for a moment last video at the very end, right, about how there is not just one, but there are two algos. Okay, so the algo 1 versus algo 2. All right, and every market behaves this way. And basically, what we're talking about is, again, keeping right on the basics. This is nothing that you can't find right in the book, right? Um, when we get to like some of the advanced stuff, that's when you want to come into the Discord and see all the advanced stuff that we can do with all the basic stuff that we've talked on this channel. All right, we're not going to get into super specifics, but we're going to get to the intro of Algo 1 versus Algo 2. Okay. While at the same time, again, continuing our lecture on why the Goldbach levels are important, how price is actually targeting certain things, right? And again, as I narrate the market more, after whatever asset that we're checking out, right, you're going to have such a solid understanding as to why price has a certain pathway from A to B. No, it's not random. It's not because you're at the high EQ or the low. It actually uses one of the algos to visually give how price is going to, travel. When you're coming down here and you understand how like the levels are in order, right? And we talked on how individually some of these levels are, again, playing out main or fractal on every dealing range. So when you're looking at, like, again, we're starting off with this price action here on July and coming downward. We talk about power 3 liquidity, which is the real liquidity in the marketplace that is going to be attacked, I mean, perfectly. Use that one. Again, we have another one to our left here. Failure to come down to the EQ, right? Now, outside of that, and again, we're on a daily chart, so it's not like a super quick time that we move through this entire 9. That's why I find it incredible, me personally. Like, having the same bias for every day for weeks at a time is, think about that, really incredible. So from a July to August, I mean, we just a couple of days ago demolished this dealing range. Seriously. And I love that, only because when we talk about how to, max out in the marketplace. We're going to start talking about how to max out. All right. Regardless of whatever market, regardless of your style of trading, you want to be in tune with the order flow of the marketplace. And when we talked briefly about Algo 1, I mentioned how it was a either market make or buy model, or it's a market make or sell model. Now, visually, when you look at that, it's a clear V, upside down V, right? Does this look any fucking thing like that? I'll let you decide while I drink some water really quick. I don't know, man. This doesn't look like a V or an upside down V to me, right? And this is the thing, yo. Can I tell you guys a secret? I really feel like there's a ghost in the room next to me, and this is just me, only because, like, weird things will happen. Like, I'll be like talking like this, and as I'm speaking, like, the iPad will do things by itself. Certain things will move around in a certain way, and I don't know. Maybe it's just me. Maybe I'm stumped. I don't know. Could be me. Anyway, so when we're talking about Algo 1 versus Algo 2, right, it's the pathway in which it chooses to complete a dealing range. Okay? And be mindful of my language, all right? Let's light the blunt on that one. There we go. People ask me, like, Jay, when you talk about Algo 1, is it because of the dealing range itself is coded to do that beforehand? Is it, like, how do we find what Algo is running? And again, in hindsight, it's a lot easier to, all right, this ghost is killing me, bro. Like, all right, bro, you gotta, like, bro. This is like killing me. My lord. All right. It's like, at this point, just put the iPad somewhere else. Like, please, just go somewhere. So, when you're looking at the high here that we get touched, we start coming down, right? This is not a V or upside down V structure. But in hindsight, when you're looking at it and when you're studying, right, I want you to notice this pathway here. And I'm going to be like really, really simple so you guys can feel the vibe, all right? So I'll put those back in a moment. But now here. Do you see how we spooled down right from here? All right? Now, for those who are understanding of this, what is this? All right? Yeah, I want a daily chart. So there's a lot of price action, obviously, right in between this area, between this candle and this candle. Before we touch this or trade parallel into this wick, okay? Mind you, this wick is a rejection block. Now, it might not look like that because we're on a daily time frame. When we go down a time frame, you'll see the structure of, again, using the wick as a fair value gap by itself. I can say it that way, okay? When you're coming in, again, the rejection block is not going to take the liquidity at the top. It's going to come down, or it's going to make a wick pop down, right? Open, come up, and take this move parallel and reject from that, and then obviously start move, all right? So obviously with this rejection block at the top, it's a little higher than our actual rejection block area, but you notice the candle is where? This candle is coming outside of my rejection block area and stopping at the EXT. I'm looking at that specifically. Now, again, on this cheat sheet, we talked about this. You can see a lot of information that I need to reference at any given time. All right. We talked about how the 3-9-27 super good for stocks, super good for options. These are what you want to trade on. 27 and the 9 are going to be your wireframe. 81's a little too big. Not saying you can't use it, but this is going to take you a while to get through for most stocks. Okay. Again, excluding all the big household name ones like Tesla, SPY, excluding that. All right. Now we're talking about, again, 27, 9, and 3, again being our primary ones you want to focus on. Now the reason why this is so cool, right? Again, it's fractal. So how price is choosing to go through these motherfucking dealing ranges, it's going to be either one of these. And again, if I'm telling you that Algo 1 was our V, I want you to notice that we're talking about the rejection block first. And again, these things have order. Okay? You notice how Algo 1 and 2, again, your cheat sheet is literally a cheat sheet. These are actually the pathways taken through your dealing ranges themselves. Alright? And the reason why I can teach on this part, and there's a lot more that you can learn from when you get into our Discord, is that this can be played out in so many ways. And I'm giving you like one of the easiest ways to study it. Again, coming on a daily chart, talking about how the smart money players operate from a daily, weekly chart perspective, right? Ooh. And the reason why your accuracy is going to be so on point, and the more we talk on time and price together, these things perfectly align. And again, you can find other videos on this, but I'm gonna give you the gem, the way that I see it through my eyes. All right. Now, what's an easy given, right? Again, if these are going in order, Algo 1 is higher low, going to your order block. And again, it's just like a bearish one, or a market maker buy model rather. It's going to be at the high or low of a dealing range. It's going to come down and reference that order block and give you a little bit of consolidation, a bearish order block, whatever, right? It's going to pop down all the way to this, like, you know, kind of hit the rejection block. It's going to come down, you know, hit the order block, and then it's going to give you consolidation down here at this opposite breaker. All right. It's going to give you all this consolidation, and that's going to drop again. Now, when it drops again, though, it's going to land in this rejection block. All right. It's going to start curving, consolidating, how we saw in the last video. All right. It's going to pump up. It's going to create a little imbalance on the way there. Smack that. Your liquidity void is right in the way. So it's going to dart through a liquidity void and give you a little bit of consolidation on the way. Probably give you a breaker or two. And then it ultimately leads right back to that same spot. So like parallel that it trades back to. All right. Yeah, how you're looking at it, right? This is through a complete dealing range. So it could do this through a 9, a 27, an 81, and a fractal way. As price is printing, you can look for the start and the stop to any algo. You just have to understand the pathways. And what's dope about this is, again, we're not looking at algo 1. So, mind you, we're talking about both at the same time. Alright? Now, when you get to like a dealing range, right, and you see all different pieces of it, and we're going to trace this out together, you get to that rejection block, you hit that order block, go watch the last video if you need the visual of it, and again, you pop all the way down to that opposite breaker, You have rejection block. It's going to be a curve, right? Obviously, the market maker Bob Otto has a sell curve and a buy curve. If it was upside down, it would have a sell curve. And this is the thing, right? Maxing out. I gave a lecture about this a couple months ago, and it applies here. You don't need a whole lot of range or to need a huge amount of points or, you know, point or price action to really make a lot of money, man. You just have to understand what you're up to. Plan all the way to the end. So if you understand how price goes through a dealing range, whether it's what we call the market maker model, Algo 1, the retracement algo, obviously, retraces. But the biggest thing is, again, these are all your major parts of your dealing range that it's going to reference in order when it's running this algo. Algo 2 does the opposite, all right? It does rejection block, and you can see evidence of that here. We see it goes down to real market secret shit. Goes down to your breaker. It's going to pop back up. And this is the real key for Algo 2. The easiest way to notice it all day. It's so easy. Once you see Algo 2, you can't unsee it. Once you see Algo 1, you can't unsee it. Oh, believe me, we're going to have some fun. Rejection block. And again, I'm using bearish price action because we've been bearish recently. Okay. Rejection block. It goes down to the breaker to your fair value gap. Is that not what I just described? Breaker or rejection block. Breaker. Fair value. And look how perfect this IOFED was. It tapped this thing. You have to zoom in to even see that the fair value gap got tagged into again. And it did perfectly. And once we expand, where is it going to stop? It's not going to stop until you get to where? Opposite order block. And if it gets close, it doesn't quite tap it, that's fine. There could be like a smaller or different objective on the way to complete the algo. Alright? So it could go back to EQ on the way back, or leave PO3 liquidity open how it does here so it can attack it later. But the whole main point is that, again, do you see how all of this makes sense? Alright? It goes in a full order. So it's going to land somewhere near your order block level. Normally it lands a little lower. Alright, so this is fine. It goes a little close to the level, leaves PO3 liquidity. That's why you have to understand narrative. Alright? Understand when price gives you a small variable somewhere. Now again, I've talked about rejection block, breaker, fair value gap. We're expecting it to land near or in our opposite order block. Okay? We get PO3. We pop back to EQ and we consolidate, which is the EQ's purpose. That's fine. We understand function. If you're using an algorithm, this is a tool. You have to understand how to use it. This is one function. So you understand that as a singular concept. And you complete your narrative. So when you pop down, where else are you aimed after your order block? Mitigation and your liquidity void. So, do you have mitigation? Yes, my guy. It does what? Mitigation shit. Which is what? Goes down. Up. Goes down. Up. Down. Up. Is that not mitigation, right? And then down. Lands where? Through your liquidity void. Does it cause a liquidity void? Yeah. And that is the end. And then once you get to a new dealing range, it starts off doing whatever it wants to do next, right? But the emphasis is what we're talking about, how all these points are making up your algo too. So your rejection block, it'll go down to the breaker, create a gap on the way, fill gap, IOFED style, or it might fully fill it. It's going to run down, it's the opposite order block, or right close to it. If it runs close to it, I guarantee you, you might want to either take a partial or something because it's going to reverse. And so you want to take a partial somewhere in here. And again, I'll be honest. I mean, like once you make it from the breaker down to the opposite order block, I mean the trade's basically over. There's not too many points left, so I mean you can just really start taking partials. And so when you get to your mitigation and leading into your liquidity void, the algo's not done and the partition's not done either. You need to understand that, and that's what makes PO3 easier. So if you already have the bias and understanding what algo is running, because it's using the levels in order, and I mean using them. So when you have a rejection block coming down to a breaker level and it starts spooling out towards the fair value gap, you understand what that is already. Oh, you're like, oh shit, bro, this algo too. Bearish. I need to fucking sell it. Right from that fair value gap. Right from that breaker. And they say, oh, well, there is no breaker. Like, there is no breaker. Are you sure? Stop playing with me. Gotta keep your eyes open. You understand what I'm saying. The breaker level is genius. It really is ultimate. I'm telling you. You missed that premium fair value gap, like I said last video, you're going to take that breaker. It fired, bro. It fired. PO3 liquidity. There's no way you need to get distracted by that buying. No way you're just going to target this random high for no reason. Because you understand algos. And you know what's funny? Is even if you thought this was algo 1, you couldn't. Breaker to fair value gap trumps that idea. It's no longer algo 1. It's algo 2. Now, when you're looking at the marketplace, I mean, however, right? You wanna know what's funny? I want to show you a little something if I can align it correctly. Now, the funny part is, again, we're looking at Oxy, right? So I'm showing what the price action was doing, again, since July till now. And basically, the reason why we looked at, again, we talked about distribution starting starting in July. So this was 18th, cool, whatever. My birthday is on the 10th of July. And also, we have 79 subscribers to the channel. Once we get to about 100, oh, we got some content. But the funny part is, when you're looking at stuff like this, look, down, up, down, whatever. This is so easy. And again, your draw of liquidity, I mean, it's clear. But when you're like operating price in this whole area coming from a daily chart, again, understanding that it's a macro, it's a bigger time frame, okay? You can find evidence of either algo on any time frame, any dealing range. This is how the market works. I have Meta here, right? Meta's cool. Yeah, whatever. So now, obviously, you see how like this is really small for Meta, and like I said, the household ones you can kind of come up a little bit in PO3. All right. So watch. So this is the thing. You see how we looked at Oxy, and it took like way longer of a time frame to complete, even like a 9. But you can go to Meta and realize that again, yes, these contracts are a little more expensive, and this is my whole thing about your contracts, is that like when we talk about DraftKings or one of the airlines or um, even like anything that is just a lower valuation. Like I said, the contracts are so cheap. You might as well load up on those when you only have like a $1,000, $1,500, $500 account. You know what I mean? That's what's going to do you a lot better than coming onto Spy or Meta or one of these that require a lot more of your personal equity. So if you can run something with 17 cheap contracts that go from a really really nice number to an incredible number once you get to your target and you're taking profit, those contracts are going to be worth gold by the time you get done completing dealing range after the next. This is really easy. And again, we're on an hour chart, so this is not a daily chart. So the same way that we can see how, again, the trade-off is the volatility. That's what you're paying for. But don't rush it. Don't not rush it. Yes, you can take an A+ setup if you really feel like you can, you know what, I'm going to jack this account up, I'm really going to go for it. But don't go outside of your means. Don't over leverage. Don't get a contract you really can't afford. Go for stocks that you can feel more comfortable trading, so you don't have to limit yourself to, yo, if I don't get this thing in 2 attempts, this account's blown. Or if I don't get it the first time, I have to come in and trade so far out of the money, it's going to need to go 10 times the space for me to really make anything. That's not fun. And you really have to come in and say, you know what? I know what I'm working with. And we understand by the price action by itself, outside of that, all these charts are doing the same thing, bro. We talk about where it takes resistance and where it's likely going to go if you are in a certain dealing range and you are understanding of time and price. And so again, we can, get a definitive starting point because I like this. All right, 20th of August. So let's do this week. So whatever week that was. So it's that Monday, 19th, right? Cool. Interesting. So again, looking at this Monday, we have Friday here. Is that Friday? Yeah. And so we'll just do like 9:30 or all right, yeah, it's like we'll do like the next Monday, 9:30. Yeah. So if this is a week, right? Nothing but a week. This is easy to navigate. And you don't even have to like really rush yourself. Look at the hour chart. It's clean, my guy. Yes, you start off a little rough, rocky, like literally like rocking back and forth. Consolidating on EQ. Alright? But this is the easiest fucking narrative. You know why? Because you're a reliable narrator now. You've met me. And I tell you how to do cool shit. Alright? So I was looking for an optimal color. You know me, I my God, spend so much time on screens, right? You get bored. So you try to look for cooler colors to look at all day. So when you're looking at this consolidation and it fails to break lower, what the hell? I need you to understand something. These should pop out to you like water. What is this? Thursday to a Friday. So that's not a new week opening gap, but a what? New day opening gap. Which was not yet filled. So what do we need to do? Fucking go up there. So if you're in this area, it's likely that you're looking for buys to target this gap. This one's filled, this one's not. We're already in slightly when we protract, right? This is a protraction phase. Okay? And what do I mean by protraction phase? Before price goes up significantly, it's going to give you a wick of a bigger candle or give you some sort of downside price action to create a wick before it range expands. Right to your high, and you understand now that you're in 27, so this is pretty significant. You're coming from EXT level which is the premium of the premium, right? And again, even if you're just understanding of premium and discount, you can't fucking buy that. I don't give a fuck how bullish it looks. If you're not buying it in this discount down here, and again, this is how cool that you can pocket price. Let's edit this. You want to be down there with it. It's having trouble breaking lower into your dealing range. You're in a discount on the 27th, and you can go dial it in with your 9 to really get that low and then start buying it up and aim for that imbalance, and which is super close to this high anyway. So you're probably going to stay for that. And so what happens here? You guessed it. PL3 liquidity, and you take it later. Now, when we're talking about all this trending in here, though, now what do we talk about? Algos, right? Let's get creative. Let's do it. So let's see. Can we find evidence of Algo 2 for this down run here? Maybe. Let's go for it. So, if this is a bearish, again, because it's downside, right? So we're already looking for the downside version of the algo. And we understand that, yes, this is like a up, then down here. But we don't have the full pathway starting here for Algo 1. So we have to start here. Does that make sense? And again, we're looking at a certain time period. So that's August or whatever. We were floating on around... Okay, so this is like the 21st of August. Alright, cool. A little laughter. Dope. Now let's see if we can connect these pathways. Now here, we are at the... Do we have the rejection block? This is how you can do it in your own study as well. I used to, like, when I started learning this, like a long time ago, I used to come on and look and see, like, the highs here, and then pop down and see if this was actually, like, a rejection block, and it was. I said, damn, that was fucking sick. And again, you get that same price action that I'm telling you about. So right in that rejection block area, what I do personally, I like to draw like a flag out of it. So I make that little wick here into like a flag, okay? And that's like normally like my rejection block. I do it that way. Hate on me if you want to. That's how I like to do it. Give a fuck. Makes me money. All right. Now right here, right, rejection block and then rejection block. I have a super huge wick we couldn't get above, right? And the same candle is coming from the rejection block. You'll see that oftentimes. So when people say like, yo, what does a rejection block really look like? And again, it's really like a up or, you know, whatever candle. You need a nice wick though. You do. You need a super nice wick. And it's just like that. It's popping up by itself, sticking out. It's really, really easy to see once you see these examples a lot. And so again, the candle itself can stick out of the rejection block candle or area. That's fine. But that's where you're going to find it. It's in the bright partition. And when you rebalance it, it goes into the rejection block. It doesn't have to go any higher. Okay? And again, we've seen other versions where you've seen it a little higher based on the time frame we're looking at. If we went downward, we would have saw evidence of that. Now watch. Now, if this is the rejection block, we need two things to occur. Alright? We need, in some way, shape, or form, the breaker to the fair value gap. Alright? So you guys know that my fair value gap is blue, my liquidity void is next, so we can annotate, right? So we can say all the way down, this is my order block level, fair value gap in here. In blue, right? I forget I have a touchscreen. And this is our liquidity void. And this is our breaker level. Alright? Always remember that. Alright? Always remember. That's why I encourage you guys to change your colors if you need to. The same way I did. You don't have to use blue. You can use another color. I have all dark theme. I don't like looking at the light screen like that. This is a lot easier for me to see what I'm looking for. So when I have the same structure, it's no different. I can look at it in crypto, stocks, forex. It's all the same. And so the same way that you see this, right? I want you to be creative with this because I can see it two different ways. All right. So the first way I'll explain it is the way that like I personally like it in my narrative personally, but I know that some people might do it differently based on how you perceive it. All right. So obviously we're coming from this high here. All right. And again, pops down, cool. But I like this rejection block here, so that's why I start the narrative here. But I don't mind if someone says, "Yo, is this Algo 2 with a small little twist to it or a variable?" And I say, "Well, I mean, if you wanted to start it this way, it's fine. You have another candle here. You can go into a smaller time frame, probably find another rejection block, and it travels down, right? Now it travels down to my breaker, and then back to fair value and dumbs, right? Obviously, we're still in this partition, so it's not done yet. Creates future liquidity, right? And that's fine. Variable, that's what I mean. So it stops for a second. It doesn't change the overall objective of this. Rejection block, breaker, fair value gap, and the opposite order block is going to be your next target. Do you feel what I'm saying? And then what did I say? It does all of the breaker and mitigation shit, so it's not going to touch the low quite yet. It does that weird thing I talked about where it doesn't quite reach your DOL for a little bit because it's generating liquidity and taking it out, right? And people think that this is a fair value gap, but it's really a breaker, obviously. Or, I mean, it can be. I guess you can call it the breaker fair value combo, all right? Then again, you get your mitigation block and liquidity void again down to the low, and you take it, right? But realistically, the whole way down, we're talking about this. Rejection block, breaker, and again, up to fair value here. So you could look at it two different ways, right? Okay? Rejection block, breaker, fair value. These candles here are linked, all right? This one's coming out of your fair value to form this gap with these three candles. So this is a valid fair value gap coming out of the level, all right? Rejection block, breaker, fair value, obviously sent through a liquidity void, reaching your opposite order block. That's Algo 2. You can't tell me it's not. You feel me? That's what I'm saying. The algo, no matter what assets you're looking at, whatever time frame, again, 27, 9, 3, bro, you gotta get into the algos. All right. And again, I just wanted to jump on real quick, give a nice little, how I personally look at Algo 2. It's very easy. And we'll talk more about Algo 1 and 2. Okay? Hopefully you learned something on this video. Damn, I gotta get some more backwoods because we're gonna run out and my favorite show's coming on. So, do we have time for 2 more videos? Well, we might. I'll catch you guys in the next one. Man, that was fun.